No respite in sight. We're still down over 400 points. 428 is the kind of cut that you're seeing on the Nifty futures alone. Extremely poor breadth in the market as well. Only 13 F&O names, excuse me, which are standing to the ups right now. 15,800 is the print that you're now dealing with when it comes to the Nifty futures. But you know, the impact of the ongoing crisis between Russia and Ukraine is not just being felt with the equity markets. Look what's happening in the commodity universe, for instance. Not just that WTI crude itself has now perked up 20% in just the last 1 week. And it's now staring at $130 per barrel. Brent, iron ore, nickel, aluminum, copper, gold, all of them have seen an escalation. Not just that, agri-commodities as well are getting hit hard. For instance, wheat has gone up more than 40% in just the last 1 week alone. So we thought to take a step back and really analyze how the agri-commodity inflation is going to impact India Inc. And to talk about wheat, in specific, we have with us Mayank Shah, Senior Category Head at Parle Products, joining in the show right now. Mayank, hi, good morning. Good to have you on the show. Mayank, at a time like this, when inflation is hitting just about, every commodity and every asset class along the way, barring, of course, equities, wanted to understand, with wheat moving up more than 40% in just the last 1 week, that must be really hurting your business.
Yeah, so this, to my mind, are the most challenging times for food companies because it's not just about wheat. Wheat definitely is one of the key inputs, but even other key inputs like edible oil and crude, primarily for packaging and logistics, have all gone up. So it's not just about the increase in the wheat prices, but increase in almost every commodity which goes into a packaged food product is going up. So while wheat has gone up because of the Ukraine and Russia crisis, they happen to be the major producers and exporters of wheat. So all the countries who were otherwise importing from them are now looking at India and few other countries. So that has led to increase in prices. Although if we talk about our own stocks, we are in a very sweet spot. We have more than twice our requirement in FCI currently at more than 30 million tons of wheat. We are in a comfortable situation. But if exports happen, the sentiment would turn bullish on wheat, and that would result in increase of wheat prices. So that's one. Secondly, I think it's even crude. Derivatives of crude like packaging will have a direct impact because of the increase in crude prices. We are talking about 128 rupees per barrel today of Brent. That has a direct impact on packaging prices. Crude also has a direct relation with edible oil. So while sunflower oil definitely, which gets impacted because of Ukraine and Russia conflict, and Ukraine being one of the major suppliers of sunflower oil, the substitute edible oils have started going up. Also, when the crude goes up, palm, which is used as a blending, biofuel blend with crude in Indonesia and Malaysia, two major producers, they increase the blending percentage, as a result of which even palm goes up. So entire basket of edible oils, has seen a huge surge in prices. So crude, edible oil, and wheat, all three put together, all three key raw material or key inputs to processed food are probably at an all-time high right now.
Absolutely, unprecedented times. I don't know, Mayank, if you've done the math. I mean, unprecedented times, so I'm sure you're taking those measures. But I wanted to quickly understand, as a percentage of your total costs, how much do these contribute? That's crude, edible oil, as well as wheat?
They contribute almost about 40 to 45% of the total cost.
So what do you do then as a strategy, Mayank? I mean, is it a given that you pass on all the commodity costs or inflationary impact because of agri-commodities as well as crude onto consumers? Or do you get conscious of how it's going to impact your volumes and take a margin hit? I know it's a bit of a tightrope walk, but as a strategy, what is it that you're planning to do?
So in normal times, companies would resist to pass on, as much or as far as possible increase in input cost. They like to absorb. When it becomes, impossible to absorb the increase in cost, they pass on. However, it's very different this time. Even prior to the starting of war, uh, the prices of edible oil were at all-time high. The crude was also high. Given those things, and given the inflation, companies already had absorbed whatever they can in terms of increasing cost. In fact, they had passed on some cost to consumers as well through price hikes. So we saw about two price hikes coming in last 1.5 year. So whatever possibility or whatever cushion that most companies had in terms of absorbing the input or increase in input cost, I think they've already done that. I think any further increase now is going to result in increase in prices, because I don't think most companies today are in a position to absorb any further increase in input cost. I don't think they have that kind of cushion today. So you will see as we go ahead, prices increasing of most products. Now, it may take a bit of a while because there are logistics which are involved, and secondly, companies have a cushion in terms of forward contracts. So, they might have covered some of their inputs for next 2-3 months. So you will see that price hike happening gradually over a period of next 1 or 2 months, not immediate going forward as in next week or in next 2 weeks. But because system doesn't allow you to do that. You have your inventory of packaging material which is printed with MRP and many other things which you have to exhaust. But plus you have that cushion of, as I said, forward contracts. But in next 1 or 2 months, you will definitely see prices of most products going up.
So in 1 or 2 months, we could see price hikes. Good morning, Mayank. This is Nantara joining in. So I'm going to just ask it straight up, very crudely, so that viewers also get a sense. Everyone's favorite biscuits, Parle G, going to get more expensive. Do you have any idea yet how much more?
No, we don't have an idea as yet of how much more. That's something that we are working on, because currently what we are seeing is, continuous increase in prices. Every day we are seeing a new high. If we are talking about, edible oil, we are seeing a new high every day. Most edible oils. Crude is going up every day, which would have a direct impact on packaging cost, as I shared earlier. Anyways, even before the war, there was almost about a 25-30% plus increase in packaging cost over previous year. Given that situation, it would be difficult for us to, predict today where the prices would stabilize and what would be the kind of increase in cost that we would have to take to offset that.
Okay, so you're figuring it out, you're calculating it. But Mayank, with wheat trading the way it is, right? Wheat prices at an all-time high, edible oil likely to go up. There'll be disruptions also because of the Ukrainian-Russian crisis and just the way Ukraine is responsible for sunflower oil. But having said that, with Mengai, what will happen to demand? Will that not impact? And we can take Parle G, for example, as a use case to talk about it.
So with increasing prices, demand would definitely get impacted. There is no doubt about it. But we need to understand that it's not just one product whose prices are going to go up. The impact of this inflationary, trend is going to be on almost every product, and the raw materials or inputs that we are talking about are inputs to almost every food product. Now, if that is the case, we are going to see a rise in prices of most products. And when you are talking about a blanket or across the board increase in prices across various products or categories, then I think consumers also understand. They also know that because the commodity costs are going up, there is increase in cost of various products. So uh, you would be impacted provided your substitutes are not taking the price hikes, or if they are not getting affected by the increase in input cost. But here we are going to see an across the board increase in prices, not just biscuits, but probably every other processed food that's there in the market. and even the regular. So when you talk about wheat, even your atta, or for that matter, home cooked food is going to get costly. So it's always relative. It's never in isolation that consumer reacts to a price hike.
Okay. With that, Mayank, I'd like to thank you for joining us live today on the channel. Unprecedented times. We are once again, seeing an energy shock. Will interest rates go up? You've already seen rupee hitting a new low.